Good morning, everybody. Hey, welcome to Wednesday, March 11th, as we look to see kind of where the markets are. Yesterday, a good up day, not enough to make up for Monday's down day, but at least it was green. What more can you ask for, right? And so, hey, as we get ready to start today, yeah, not so good, folks. I'm sorry to say that we are back to that roller coaster ride, and I'm sure Dave will have some input on that. Looking forward to our conversation today, and Dave will be on the line here in just a moment. Though before he joins us, hey, let me just remind you, it's never too late to get a second opinion. You may feel like it's late now in the game, seeing what we've seen the last 3 or 4 weeks, but it's not. Man, now is the time. It's never too late to get a second opinion on your current portfolio. There still could be more downside. Let's find out how much risk you have in your portfolio. Give us a call at 863-382-0037 to determine if your portfolio really and truly lines up with your risk tolerance.
5.7 Light FM, Chainsmokers, Coldplay all together again. It's 19 before 9, 8:41 here.
Okay.
Nope, no, do that. Look at that. There. Check in on your money. Although fruitcakes probably wouldn't be a bad description for the people that are steering our economy right now, because Washington didn't help us one tiny little bit yesterday. Let's drop down to the offices of Statler Financial Services and see what Phillip Statler's take on the matter is. Phillip, good morning. How are you?
Good morning, Dave. Hey, welcome to Toad's Wild Ride. How's that sound?
Oh, geez, it's a Dramamine city. Bring everybody up to date. It was a great day on Wall Street yesterday. Dow went up by 1,167 points. NASDAQ up by darn near 400. And the Standard & Poor's up by over 135. And you'd think happy days were here again. Well, all day long, we were arguing over the thing that actually got things going crazy yesterday. President Trump saying that he wanted to institute some fiscal policy efforts to stimulate the economy in the face of the coronavirus scare. The Republicans didn't like his idea of a payroll tax holiday because it's bad economics. The Democrats, for some ridiculous reason, said they didn't think it helped poor people enough by eliminating a tax that gets rid of the first dollars on their income, the most regressive tax in existence, and they thought that was a bad idea because it didn't help poor people enough. You can't trust politicians to pick their nose without messing it up, can you?
Well, they're just all talking heads up there. We need some real help here. And one of the things I think it concerned me, Dave, is the CDC coming out, and I don't know that they're helping us any. They're bringing as much fear as anything else. Hey, if you're over 60, stay home.
Yeah.
Add up all your supplies and make sure you have enough to stay home for a long time.
Yeah, I mean, there's nothing quite like the government saying, hey, stay home, don't go out, don't spend money. Now, in a consumer-driven economy, that's kind of like handing the economy the keys to a recession, isn't it?
It really is. And so, I understand the fear, and I'm not a medical person, but you know what? I mean, I think that when you start driving so much fear, that's what causes the havoc we're seeing right now.
Actually, you can take it back to, about 12 years ago. Back in 08, 09, it was more fear than anything else. Statistically, the bum mortgages that got mixed into all those funds that were being bandied about that prompted us into that recession, it was at most 10% of them were bad, but it was enough to scare the pants off of people. And the consumer economy drove us into that recession far more than the Lehman bankruptcy.
That's right, because the world was coming to an end, right? The way we knew finances as a whole were coming to an end. Did that happen?
Yeah.
No, it didn't,
Yeah,
and so
that we always seem to survive it. And every time we get into a scrape, we seem to be driving it by consumer fears more than we actually do events that actually cause it.
that's right. And I understand there are people going to get sick, and half of us may get sick. Nobody knows that yet. But when you look at the number of people that have recovered, they don't talk about that part, but over half the people that have gotten it have recovered. The other half are still fighting it. But those people with weak immune systems are the ones that have have passed away. And so, I think that's what we as human beings need to remember is that this too will pass. And if you're a healthy human being, uh, you know, I just don't believe you have much to worry about. I mean, you're going to get sick like the flu, but I'm not a doctor.
Absolutely. I mean, the county is busy trying to handle rumor control about whether or not we actually have a suspect case here in this county. Okay, fact of the matter is, the odds are we're going to get some cases of coronavirus here in this county eventually. Right now, they don't even have any suspect cases, but all of a sudden, we're flying around the room backwards here. As you say, the fact of the matter is, this is an uncertainty. It is something that does deserve caution on part of people that are living in the county, especially those in at-risk groups. But overt panic, lock yourself in your home and desert the streets. Okay, Italy has a reason to for a little while because they've got thousands and thousands and thousands in a small space. But people, let's not crawl in a hole and pull the hole in over us either.
Yeah, because New York's about parts of New York, I guess, are doing the same thing as Italy right now. Sounds like,
Yep,
to a certain
pretty
degree.
close.
So, hey, let's get to talking about what we're supposed to be talking about today, not healthcare, but the financial world that we're in. We did have some numbers come out. The CPI came out this morning,
Yes.
and it was in line. It is up 0.2%, which is what was expected to come up, driven by increased grocery costs, food costs, those type of things have increased. We're still going to fall short right now. It looks like of the annual number that they're shooting for. So that's not necessarily a good thing, but inflation is way under control. I mean, not near what the Fed actually wants it to be.
Absolutely. And what that does do as well is that gives the Fed a little bit more leeway. I mean, we may or may not like what those interest rate cuts are. You and I have talked that ad infinitum, but at the very least, we know we're not triggering hyperinflation by these cuts anyway.
Oh, well, that's for sure, given what we're looking right now at interest rates and looking at what the inflation rate is, but it doesn't mean it can't lead to that.
Understood. The other thing affecting the economy as well is the oil market, and the gouging price war between Saudi Arabia and Russia continues. You got a news item I didn't catch that Saudi Arabia announced they were going to increase production even more, huh?
Yeah, they did. They came out and said they're increasing their production, and so as soon as they let that out of the bag, we saw oil prices drop a little over 3% this morning. So I didn't see what their production increase was going to be, but they are definitely trying to put a hurting on Russia and us as a whole when it comes to the oil industry. Now, I did see an article that President Trump is trying to get Congress to work together to come up with some kind of help for the shale oil industry to help keep them from shutting down totally and give them a little bit of help.
I'm no fan of subsidies, but at this point in time, while we're collateral damage to that spat between the Saudis and the Soviets, some assistance for the oil shale industry at the moment in terms of price supports. And God, did I ever think I'd say that on the price of oil? It might actually not be a bad idea for the short term.
Yeah, I mean it's interesting to see how that works out, but he's not getting much support, I don't think, in Congress for that either. So we keep working on those things. We do have a couple things that have come out. So a couple companies reported.
Good.
Express, which is the apparel retailer, they had a pretty good quarter. They beat by a penny a share. Revenue top forecast, same store sales top forecast by about 0.3%. So everything was looking good for them. A really good quarter, and they're up. Probably one of the few things you're going to see is up today. They're up almost 5% this morning.
Good to see something on the winners list that reported some earnings.
The other one I have is, and I never really heard of these people, but Cloudera, which is a cloud-based computer company, and they earned 4 cents a share compared to losing 3 cents a share that everybody expected they were going to do.
That's cool.
Revenue beat forecast. They had an upbeat forecast for the rest of this year. They're up over 8% this morning.
Cool. All they need is a name that doesn't sound like a social disease.
Yeah, it is a little funny. Let's say. And you got Hilton. Hilton has pulled their full year guidance, And so that's obviously affecting their stock. They're down about 4%. I think we'll probably see that across the travel industry because of the unknown and uncertainty. On another note, though, we got PepsiCo. They're actually buying some companies. They're going to buy Rockstar Energy drink for
Cool.
$3.8 billion. So they're expanding their product line.
I got to assume if your company is doing okay right now while stock prices are in the toilet, this would be a pretty good merger and acquisition time, wouldn't it?
Yeah, it could be they may be waiting for the prices to drop a little bit more. Yeah, everybody wants a good deal on sale, right?
You've heard that game from your clients before too. Trying to time the market is about the most dangerous thing you can do, whether you're talking about $1,000 or $1 gajillion, right?
Yep, you're absolutely right. That is for sure.
Well, resetting the table again. It was a green day on Wall Street yesterday, even without all this other garbage going on. One would assume it'd be a red day today, and yipper, add the garbage into it. It looks like we have some pretty red numbers ahead of us. Philip, how we doing 45 minutes early?
Not good, Dave. Not good. You know, we have continued to fall this morning. We're down about 3% right now, almost across the board. The Dow is at down 745 points. S&P 500 is down 91 points. The Nasdaq's down 233 points, which is only 2.8%. So it's the better of all of them right now.
Winner!
Yeah, winner, chicken dinner, right? So, so then we look at commodities. Oil, gold is up a little bit, 0.25%. Silver's flat right now. Crude oil, like I said earlier, is down 3.7% to $33 a barrel.
Good heavens. Overseas markets are pretty much following our lead. Asian markets were considerably down at the close early this morning. A weird mixed bag in Europe. British markets are holding relatively steady, down by about 0.25%. Germany just crossed into negative territory. They're right around the zero mark this morning. They aren't overly excited over there for one reason or another. Philip, this is just that time where one's retirement account is at risk if you're too heavily into the wrong investments. How do I get a hold of you to find out how much risk there is in my portfolio?
You know, Dave, they can give us a call at 863-382-0037. You know, I was telling people before we went on the air when I do my little pre-thing for this that it's not too late. It is not too late, even though we've had three weeks now of this ups and downs and more downs and ups. It's not too late to find out how much of your portfolio is at risk and to make sure it lines up with your number. And so that's really what we do with our financial x-ray. So give us a call, schedule that appointment, 382-0037, and then join us every weekend for the Statler Financial radio show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730 a.m.
All righty, and back here again tomorrow morning on Light FM. I've gotten a couple of phone calls, Philip, asking me about it, so let's make the announcement and make it known. We're going to help you with your shredding issues come after tax day, aren't we?
Yes, we are. We moved it up a little earlier this year. We're going to do Friday, April. I got to figure out what month it's going to be. April 17th. That's Friday, April 17th from 10 to 2. We'll have the shred truck here. We'll have some hot dogs, cold drinks, and we'll have the salt guys here. That's the senior group from the sheriff's department handing out stuff for identity theft and that kind of thing. So looking forward to it.
Useful stuff to get rid of your valuable papers safely on the 17th of Friday, right after tax day in April. So write it down, folks, and now you got your questions answered. Philip, I appreciate it. I will catch you tomorrow, all right?
All right, man. You have a great day.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, as I said, if you are in that retirement danger zone, what does that mean? You are 10 years out from retirement, or you recently retired 5 to 10 years out. That 20-year time span is just so important that we don't lose a lot of money in our portfolio and our retirement accounts. And so give us a call. Let us make sure that you have the right amount of risk in your current portfolio. 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.